The activity level was really suppressed over 2012, and then we came into 2013. Julie Gillard in January the 30th called an election for September the 14th, which was then followed up with Kevin Rudd coming in and announcing on the 27th of June a 4th of August election date. And so the markets had to really stand back. It's sort of when in doubt, stay out. And so there was generally uncertainty over that, the 2013 calendar year. However, even with that uncertainty, it was still significant more M&A activity than the preceding 2012. Reuters nominated there was about 69.5 billion of M&A activity that was conducted. Merge Markets nominated that 2013 was in excess of 1,000% increase from 2012. Yet it was still relatively subdued within the financial services market. With more and more, and we also, not only do we have the political uncertainty, but then we had the legislative uncertainty with FOFA. One, it was being introduced on the 1st of July 2013, and what did that mean? But also, depending upon who got in, what was going to stay, what was going to be repelled. And with the new government, there was a significant amount of confidence that there was going to be a repeal of many of the sort of inhibiting legislation that had been introduced by Labor. The real confidence started to happen with Arthur Sinodinos, who made some comments just prior to year end in December that was a real signal and gave confidence that we were going to sort of seek a common sense approach to FOFA. And it's with that we really saw buyers come back to market. SFG was probably the best example in the advice industry of really well-managed, high-end advisory. And I suppose that SFG is now also a model for many people who are aspiring to capitalise, come together, do listings. And again, IOOF are really good at extracting synergy values. They're looking at about 20 million synergy values, I think, by 2016. And they're very well experienced and likely to do it. Additionally, they've now gone into, are they independent, aren't they? Because that acquisition, I think, put them in to one of the largest funds management and advice firms. They have got a really good history of allowing their underlying dealer groups, consultant bridges, have an open recommended list. And so I actually I would still deem them to be within the independent space, even though there's an underlying fund manager there. But it's certainly not the sort of control mechanisms that are exerted by the big four banks. That technology space is becoming more active. And I think over what we're looking at, the market has an expectation that we're going to see the evolution of platforms as well, and that'll be the game changer. At the moment, the big four are sitting on old technology, which is creating a significant amount of, I suppose, disenfranchised members or advisors underneath that. They're sitting on master funds and wraps, where we've really come into the area of IMAs, MDAs, and the technology is the great enabler for cost savings. However, the institutions want to maintain margin. And so that fight's going on. But eventually the technology is the enabler. And I think it's also going to be the enabler for the independent space. They'll be and have been the early adopters, and so that'll continue through. There's big investment that's going in that space. BT is probably most noticeable, and then there'll be others. But I think that a lot of them will also be looking at acquisitions of technology, and so that'll be continuing to be a really active part of the market 2014, 2015 and beyond. We've seen that artificial sort of freeze within the market group. We've seen the failures of AFS. We've seen enforceable undertakings on Commonwealth Bank and the ongoing scandal in that area, which has basically mean that there's been a risk reassessment. And so I don't think that we'll see the land grab that we saw from the big 4 or 5 continue within the dealer advice space. I actually think that what we'll see is that there a rise in the independents. And this will be through mergers and acquisition, whilst we've seen the recent merger of Patron and In Focus. We'll see other dealer groups, mid-sized dealer groups, that will come together, and they'll also be looking for synergy benefits. They'll also be looking for a commonality of platform, because that's where you can drive costs down for the consumer, but you can increase your own underlying profitability by further participating in the value chain. So it makes an immense amount of sense, but also survival is going to be determined by size. And so I think we'll see a lot more dealer-to-dealer type of transactions. I think the appetite of the institutions has been sated. I think that obviously there's been a new risk assessment, and whether they're getting their value that they expected would be questioned. But I do see that there'll be I think the rise in the independents will also be, the space that the oligopoly acquired and the dominance that they have enjoyed now, and that it's a significant dominance in the marketplace. I think that's going to retreat. I think we'll see breakaway groups from the larger groups, and I think it's going to be because of fiduciary care, that advisors will no longer are no longer satisfied with the platforms that they're sitting on. So it is technology that's going to be the push. They're going to say, this isn't in my client's best interest. As at the same time, the institutions want to keep their margin, so they're not going to be adopters of the new technology. So I think that's going to be a great impetus. I think also what we've seen is the cultural gaps between the bank-owned distribution and the underlying business owners and principals. And that tension's increasing. And so I think that we'll see a reversal. The big institutions were a nice, safe harbour to shelter post-GFC. I think that we're now seeing that it has calmed down. We've got cleaner waters, it's a lot more navigatable. We know what we're sort of dealing with in the legislative environment. And so I think we're going to see a lot more people coming back in, and we'll see a reversal of that institutional oligopoly.